Hi guys, welcome back. So first, let's look at the market today. As expected, the NASDAQ is moving up and down. It might continue like this, but I think the possibility for the correction to end sometime today or maybe just 1 or 2 more days before it goes back up, it's higher than 50%, I would say. So we might be near, in my opinion, but of course, the safer entrance would be when the index passed through this resistance of 13,700 with some volume. But by that time, everything would be more expensive. So it depends on your investment style, whether you are more radical or more safe. On the other hand, S&P 500 has dropped further today, but it has also reached a strong support, so it might bounce back up from here or just take another day or two. That would be more of a possibility from here, maybe more than 50% of the chance. And Dow Jones, what a big difference. Just 2 days ago, everyone thought the Dow Jones sector would lead the whole market to continue going up, but instead it's gone back down, clearly bull trapping a lot of people to chase the recovery stocks. I think right now, the sector rotation is really getting faster and faster. So that's why I would recommend for us to be consistent, to not cut down our stock, such as the tech stocks that's at loss, and then go chase the recovery stocks that's already gone up. In this situation, when the sector rotation is getting faster, I would rather stay consistent instead of keep changing, because I don't think we can be as fast as the institutions. So today it's clear that the capital mostly had gone to the mega cap, such as Amazon and Facebook. So that's why they have been recovering a part of the loss from yesterday. And pulling these mega cap up would take a lot of capital. So that would explain why the small cap stocks had been performing weaker today. Not only the small caps got weaker, but also a lot of the Chinese stocks had dropped a lot. So this week, a lot of the Chinese stocks might have had a bigger hit than the general market, such as our NEO, EH, LKCO, YSG, and WIMI. Especially YSG and WIMI keep making lower low. Why is that? We'll come back to this topic. Let's go over with our list first. So, baby NEO. NEO has first broke the support of 55 and then broke the support of 49. So first challenge is come back to the 49 support, because right now the previous support of 49 and 55 would become resistant. So it might take some time for it to break through both resistance, because there are a lot of people that got trapped here. A lot. Not just retail investors, a lot of institutions bought here in this area. So they're all trapped here. So right now, to be able to break through and stand back up, it would take some time to break the resistance slowly, okay? Give it more patience. Now, something to notice is that the earning of fourth quarter 2020 would be the end of the day of next Monday. And I expect the earning to be good, but the problem is the expectation, because a lot of people already expect it to be good. So they really need to have something in the earning that's unexpected, that's surprisingly good for the share price to explode and break through this resistance. Such as the percentage of the BAAS model, such as the margin getting bigger significantly, such as the other income like Power Charge or Neo Life growing more than previously. These would be more the factors that's unexpected, more of the surprises. So it's not impossible. These few days, Neo had dropped to a point quite a good value. So I think a lot of people had bought the dip here, and not just retail investors, also a lot of institutions bought the dip here. I believe NEO is something that a lot of institutions would be happy to catch the falling knives. And for me, myself, I bought call options. So we'll see how the earning goes, okay? For NEO, I would make another video to talk more about the fundamental, because it's been a while since I update a video for just my baby NEO. I hope you still look forward to it, because our baby has not been doing quite well recently. And next, it's our EH. So now they should be slowly coming back to work from the Chinese New Year holiday. So I would think they are preparing for the lawsuit and some kind of fight back to the Wolfpack research. And we do need them to give more response and more news about the recent cooperations or contracts. Because after the Chinese New Year, they should be able to be in talk with more contracts, more partnership. And as I mentioned before, there are a lot of people that trap at the top. So it would take some time to digest the share at the top for people to cut loss and for people to take profit. So then we are more concentrated to push the share price above the resistance level. Okay? Now WIMI should be performing quite well recently, probably had dropped the least within the correction. Now some of you may not have noticed that WIMI, ticker symbol HMI, has changed to ZEP. Ticker symbol changed to ZEPP. That's their new brand name because they have a new company name as ZEP Health. I added some call options today. As I mentioned many times, I'm very bullish on ZEP this year. So I will talk more about it in the videos later. Luckin is one of the green ones today, staying above the support line around 6.3. So I do expect it to rebound from here. It's the same problem with EH. A lot of people stuck here that needs to cut loss. Once everyone lose patience, it's when it starts to fly again. YSG has dropped a lot since the top, but at this point I do expect it to stop now. Earnings are coming soon, so there might be some catalyst. First support is here. I think the possibility for it to go down and reach the next support around 16 would be quite low, but I expect it to be more like bouncing up and down and then challenge the next support line. And then it might get rejected at 21 as the resistance before breaking it through. Q4 should be the high season for cosmetic because of the Double 11 event. So we can look forward to the earning. For now, we need to give it some time for it to consolidate first. JKS is slowly recovering as the solar sector would also recover as well. But I think at this point, JKS would grow better than the other solar plays. The only problem is that it fell below the support of 51 before. So it should not drop below 51 again. Otherwise, it would take too long to recover. That's why I would expect it to continue growing higher with the 51 as the support. Plus, we have earning coming up soon and potentially other projects. Good news. So I have good hope for JKS. WIMI today bounced back at exactly the support I drew before at 7.8. This should be a strong support, so it was a good time to buy WIMI if you haven't had a position. Even though it has dropped a lot recently, it's still overall in an uptrend, growing up and backtesting support. So at this point, it's a good entry point. We will see more and more good news for WIMI, I think. For example, their partnership and contracts. So if you already have WIMI, just sit tight and hold. I would suggest. I think it's more than likely bounce back up from here. So why did the Chinese stocks drop so much recently other than the market correction? I think it might have something to do with the market sentiments towards Chinese companies. First, it was EH being shorted by the Wolfpack research, making it drop 60% in a day. That was already scary and it's still a fresh wound. And then the SOS. Now SOS, it's a Chinese tech company if you didn't know. They offer SaaS, cloud, and big data service, etc. I don't want to go deeper into this, but it got really hit because of a short report that came out from Hindenburg Research. So they issue a short report on the stock and set a zero price target. Similar with EH, to say it's a scam and dig more into the company. I don't want to dig deeper into this because I did not spend too much time into this stock because I don't own SOS. But I just want to show you this to say that it happens one after the other quite often now. And it does affect the market sentiments towards all Chinese companies. And I would think it somewhat affects most of them. And it just makes me think suspicious. Like, why now? Why suddenly they come just one by one so often? Why at this point? Are they also aiming for other Chinese companies? And what's their goal? Now, if you had watched my in-depth analysis about EH being fraud issue video, I said that I did not think this is only caused by the Wolfpack research, because I think the institutions had helped also because they knew before. So this movement had definitely the help of institutions, in my opinion. And I do think the goal is to scare people away from a lot of Chinese stocks. So then people are sick of the drama and sick of the Chinese companies. Because as I stress in multiple times, I believe 2020 is the year when a lot of Chinese stocks would take off. Because not only a lot of them would have fast growth in the emerging market, but also they really had nearly the lowest evaluation for many of the companies, such as our WIMI was very typical. Actually, ZEP now, and LKCO, and JKS, and of course, Luckin Coffee. They are all in high growth industry, high growth company with very low valuation. And not only this, there are more. So there are a lot of Chinese stocks that have fast growth and low valuation. That's why I think from 2021, the political issue would be less and less concern, and the valuation would start to make sense again. And that's why I think this year, the Chinese stocks would start to take off. There is a saying in Chinese, I translated. It means waters flows down. Waters only goes down. And I think it's perfect to describe the situation for Chinese stocks right now, because the capital would go to where the valuation is too low. I believe this is where the money would go now in 2021. To these companies that we think have such low valuation that doesn't make any sense. So that's why I think the institutions are planning this along, short selling, hitting those companies one by one to scare people away from the Chinese companies. Especially we saw the news from last week, right? Saying that China is allowing investment in overseas stocks. That means each individual can spend up to 50,000 US dollars on foreign stock exchange. And I said, even 1% of 50,000, it's a lot. Let's do a little math. 1% of the whole Chinese population is 14 million times 50,000 US dollars. That's how much? How much is that? That's 700 billion. And that's only 1% of the Chinese population. Because there would be other middle class that might have less than 50,000 US dollars a year. It could be 10,000, it could be 20,000, I don't know. So it can be easily up to $1 trillion US dollars a year, right? So it could be somewhere around 500 billion to $1 trillion per year from the Chinese population to the foreign stock exchange, right? And what stocks would it benefit the most? For me, I think, of course, it would benefit the most in the ADR, the Chinese stocks listed overseas, especially those popular ones like NIO, Bilibili, Alibaba, Tencent, all of these that they are the most familiar with as the Chinese consumers, right? So this amount of money per year would be a lot injected into those Chinese companies. And if I'm not wrong, maybe the institutions are thinking about the same thing. And that is why we have been seeing more hit for Chinese stocks recently, to drive down the sentiments towards them, to make people scared of them and stay away from them. So knowing this, it just makes me more persistent on the belief of my current holding, because you do know I hold a lot of Chinese stocks right now. Majority of my portfolio is in the Chinese stock already, and I feel great about it. Even though it has been hit recently, I just feel great about the future. I know it would pay off well, and I just have to tolerate the temporary hit and stay strong with the belief I have in the companies as a long term. Now, out of all the stocks, I think what you're concerned the most might be LKCO, right? Because it has dropped another 14% today. I don't want to make this video too long, so I'll make another video to update about this during the weekend. But I did see a lot of the Discord members were starting to panic while it was dropping. Now, if you look at the 5 minutes chart, because a lot of people thought it would stop dropping from here and it turned positive, but instead it continued reaching lower. So near the end of the market, a lot of people got panic. So I right away said that it's good that you're feeling panic because it just means it's working. As I have prepared you for 1 or 2 weeks now that this would happen. We would experience panic for people to cut loss that are trapped from here and for people to take profit that bought from here. Anyways, as of this point, maybe you can also think about this before I upload my next video. As a homework, what do you think about this drop? What caused that? Who was selling? And talk about the volume. Give your opinion on the comment section. This is your weekend homework now. So you can also think about what caused this movement and what's your prediction from here on before my next video, okay? Now that's it for today. I just wanted to give you a quick update on our stocks and as well as some Chinese stocks issue recently. I know we have all had a tough week. Actually, the second part of February was not very flattering, but we will look forward to March to be a great, potentially good things might happen later, so you can relax during your weekend and possibly take some time to think about your strategy during the weekend when the market is completely closed with no price action in the short term, so you can think about your long-term strategy. That's what I usually do. And meanwhile, enjoy your weekend. And if you have enjoyed this video, please give me a big like and write me a great comment. And I will see you tomorrow. That's it, guys. Hope you can find my videos helpful. Make sure you subscribe to my channel and give me a big like. Thank you.